Hello dear traders, welcome back to Insta TV for another release of financial news with me, Anna Kasatkina. In the Asian trade on Monday, investors are flocking to safe haven assets like the yen, Swiss franc and gold amid growing geopolitical tensions toward Libya. Asian high-yielding securities, US Treasuries and futures on US stocks are retreating from earlier highs amid waning risk appetite. The dollar-yen pair again pulled back from a three-week high and sank sharply to 111.40. Last week, the yen found support from positive data from Japan. On Monday, data on Japan's current account and trade balance came in beyond expectations that triggered a brief recovery of the yen. Besides, the International Monetary Fund posted a financial stability report, which indicates a waning risks for such key global economies as the US, Canada, Australia and China. Besides, the market was affected by the news that the US State Secretary Mike Pompeo warned Libyan military leader to halt his forces' advance on Libya's capital, Tripoli. Meanwhile, the yields of the US 10-year Treasuries skidded to 2.49% from 2.5%. The dollar-yen pair surged 200 pips in the recent 2 weeks amid positive news on progress in the US-China trade talks. Market participants cheered the US non-farm payrolls released on Friday. Now traders are anticipating Japan's Consumer Sentiment Index for March and a report on the US factory orders for February. The Australian versus the US dollar pair is trading at near 0.7100. Lately, the pair has been trapped in a trading range from 0.7100 to 0.7130 as the welcome news on the progress in the trade talks caps the greenback's advance. The Aussie always benefits from positive China's data, the largest trade partner of Australia. Last week, China reported on success in the final round of the trade talks. China's top officials contributed greatly to the deal's draft. Other surveys important to the Australian versus the US dollar pair are unemployment claims from Australia and the US factory orders. The US dollar index, which measures the value of the greenback versus the basket of 6 major currencies, rebounded from intraday lows to 97.30, thus having regained earlier losses. Meanwhile, oil prices rocketed to the highest level since November 12, 2018. Brent crude is trading at $70.70 a barrel since early morning. Experts say that the bullish trend in global stock markets accounts for such a sharp rally of oil prices. The news will provide commodity currencies with support, including the Russian ruble. It is showing resilience despite the threat of the US sanctions on Russia. Besides, the ruble usually weakens in the second quarter. The ruble is trading at 65.30 versus the US dollar and 73.30 against the euro. The US dollar sagged in the Asian session on Monday. Let's see whether it will change its dynamic in the European trade. That's all for now. Stay tuned.